satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We're going to be talking a little bit about what's going on in Europe today. I posted a chart of the German DAX, followed quickly by the chart of the FTSE, the hourly charts. As you can see, they've been in a strong uptrend, but again, the ABCD patterns are forming. So what happens next, we'll have to wait and see. We've got a weekend coming up, and this being the 2nd of December, I can't believe it's the 2nd of December. What happened to 2022? It was in a heartbeat, for heaven's sakes. I just can't believe it. Now, we're going to talk about a market that everybody uses, and they probably don't even know it. They use it every day, and that is copper. First of all, we're going to take a look at the daily chart. It's going to go back over the last 6 months or so, and then we're going to move over to the monthly to see where we are with copper, because it's a, everybody's involved with copper, whether they believe it or not. Here's where we are recently over the last 9 months. You see the big ABC down, and then you see the ABCD up. You got a beautiful 1-3-5 pattern here. The market's continuing to go higher. And that is a completed ABCD pattern, by the way. And we're going to look at it on a little bit longer time frame now to get us a better idea of what it looks like. So, it tells us we can't predict the future, but we can get an idea of what's involved when you're looking at the future. So the first thing we're going to do now is we're going to go and take a look at the copper going back just over the last 3 years. We're going to go back to 2023 and get this up here. And see this right here. Okay, there's where we are. And there's where we are right at. You can see a beautiful 61% retracement. And there's the ABCD that we're looking at right now. You see that little ABCD? Now that happens to also be a 382 retracement off of the high that we had up here. Now look at this market here. This is a perfect butterfly, folks. You see A, B, C, D, but you see the move in the middle? If this were up just a little bit more, that would be a perfect 3 drive to a top pattern. But because it doesn't do that, that butterfly pattern takes control, and that's why you want to look at it. I learned the butterfly pattern from Bryce Gilmore. His program would make these pictures just like this in color, and every time I saw one of these, I can remember my daughters cutting with their little plastic scissors the old commodity perspective charts, and they would see the lines that I drew on these. I didn't know they were butterflies, and they would color them in, and they would cut them out and put them on the refrigerator. And I never saved any of them. That's really, but believe it, folks. You think Fibonacci's not? When I went to Westlake Village to live in 1967, I think it was, I had a random phone number, folks. Area codes in LA were 312. My phone number was 312-889-1618. And I didn't even dawn on me until 1970 that that's what my phone number was. I mean, it's just crazy. Okay, that's the weekly chart. Now, what we want to do now is we're going to extend the weekly chart even out a little bit farther so that you'll be able to see it over the last 9 years and actually 10 years. So let's get this up here and we'll take a look at it, because we're at a real critical level coming in here with copper, because as you can see, looking at this is an ABCD at a 382. Now look at this, perfect 61% retracement, just absolutely spot on. You couldn't get any better. Look at your double bottom down here. You got this big, now that's a butterfly bottom, see? You take out the low by just a little bit, and what do? Boom, you turn like a rocket. Now you don't have to pick this low. All you have to do is wait till it hits, and then you buy the first up bar or the second up bar or the first 382 retracement that you can see. That's really all you have to do. So copper is in a real critical level here, almost like everything else that we're looking at these days. But it's going to be wild no matter what, and I'm looking forward to the enjoyment of it. So let's keep our eye on the ball here, folks. Now, I want to talk just a little bit about the gold market because we've had a tremendous run here in gold here. But this is just to show you what we're watching here because we've had a beautiful retracement here, and it stopped right within $2 of the exact 382 retracement this morning and has rallied all the way up. Now, here's what I did today. What I did was I sold this 382 retracement the first time. Then it went down, couldn't make a new low, and then stopped me out, and when it continued to go higher. But that's what you want to be watching. You can see these numbers, how they line up. They're just absolutely unbelievable. Just to prove that to you, I want to show you one that we all look at every day, and that's the E-mini S&P 500. We look at that like it were, going to church. And as we get up here, we're going to open the doors of the church and let you see this. Better be careful. God will get mad at me. You can see the A, B, C, D pattern here. Okay, makes it up here. All right. Now what you've got is you got a pullback here from this high down from this low. The exact 61% retracement was the low of the day in the first few minutes of trading. Boom, down, 9:30, 10 o'clock. There it was right there. The report came out, the jobs report, shocked the bejeebies out of everybody, but look where it stopped. Do you know why they stopped like that, folks? Because these folks that out there with these algorithmic trading systems know these numbers. They have to know them because if they've run these numbers through these charts, they're going to jump out of them like you can't believe it. We bought a MIPS computer, which means millions of integers per second, MIPPS, and that machine cost me $6,000, and I had two of them. Had one wore out, and the other one, I got the other one. The best $6,000 I ever spent. Well, not quite, but it's really an amazing machine because these numbers would just spit out, harmonic numbers over and over. You'd see these numbers out of random markets that you think were random, which in fact they're not. And so that's why, I watch these things so very, very closely as we see that. Now, when we come back, I want to walk through. Hold on one second here. I want to walk through a couple of markets that I think we need to pay really close attention to because they're knocking on God's door, as they say in the trade. And I need to talk just a tiny bit about this concept of the trade of the year because I want to go through the coffee because I don't trade coffee at all. But by golly, I do want to be watching it very, very closely here. Absolutely closely because it's that important. And by the way, our guest today will be none other than the wolf trader himself, Shane Smolian. And next week we have some really good guests. We've got John Person on Monday, and I believe we had somebody really special on Tuesday. Yep, Norman Nixon. Wednesday we're going to have Timmy Bost, and then Peter Elides will either be Thursday or Friday next week, and hopefully the week after I'm going to be contacting Larry Williams to see if Larry will have a few minutes to spend with us here at TFNN. So if you have any questions, folks, it's 877-927-6648. We'll see you in just a few minutes. Got to pay a few bills for Tommy O'Brien and company.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I posted a chart of coffee. And as you remember, those of you that haven't heard before, but I used to do these every year for TFNN and never lost any money on any of them. 8 of the 11 were really great. 3 of them broke about even. Now, this is coffee. And someone asked me how would they spend their money if I were doing a trade of the year this year. I said, well, the one that looks the best to me is coffee, because if you look at this is a weekly chart, and we went right down to the 61% retracement. You can see this little blurb that we had here the last 2 days of trading, actually 3 days of trading, is very, very important, because that was a 10% move off of the bottom, which that was a lot of money. You're talking about 16 cents in coffee at $2.50 a pound. You know, that's a lot of Joe, as they say in the trade. But look what happened to copper. They start with the same letter, Larry, but the one is copper and the other is coffee. So let's get back to coffee. Hold on here 1 second, and we'll be looking at this right here. And there's where we are. By the way, our guest today will be Shane Smolian from wolftrader.com. But the guest, we made a perfect ABCD up here at 71. 171 a pound. You can see now we're trading at 155. That's given back quite a bit. Now, our buy was down in here. Okay, that was about 6 or 7 days ago. So what we assume now is you put your stop at break even. And if it gets to 155, you don't lose any money. That's what I did on all those other trades that didn't win, but they didn't lose, because I moved my stop to those levels. Now, some of them went below it. Some of them went down and just barely stopped it out and then went up, but that's how I trade. I trade to not lose any money if you possibly can. Remember Warren Buffett's rules, crazy as they are. Number 1 rule is don't lose money, and number 2 rule is to don't break rule number 1. That's what the game is about. It's not how much money you make, it's about how much money you don't lose. Yesterday I was setting in for Tom O'Brien, and I spent a half an hour going over the stuff that was drilled into me by Mark Douglas, and I'm going to start drilling in more because I got more compliments and more requests for that than anything I've done here at TFNN in years. And believe it or not, the most important cycle of all. Now, if you can see me on the internet here, you see this little thing right here? This is a cycle finder from ear to ear. Once you get this cycle right, this 9-inch cycle, from there to there, it's over. You got it. That's all you have to do. Because then you know, without an unequivocal doubt, that you know what the hell you're doing. Now look, I take a lot of losses. You know, I do. You know, look how wrong I was on the natural gas. Looked like a perfect trade, and it went up and broke even again. Bought it again, went up, broke even again. But by golly, it just keeps going down and down, so you can't stand in front of it. So that's basically, we had great trades in crude oil and gold this week, which were, you know, those were phenomenal. I mean, just looking at some of those, the gold, you know, 17.25 was the low. It went up to 17.20 or 18.20. Crude oil just posted here, because we've been through it several times. There's another one here in crude oil, again at the 382. But today, the 382, not so good. Took 3 quick losses in a row. Well, two quick losses in a row. And we got a caller from Spokane, Washington. Yes, Robert, what can I do for you?
Hi, Larry. Good morning. Hope you're doing well.
I am. Thank you very much.
Good. My question on the euro. I noticed we've had several times, and I've noticed something over the years. I trade the euro a few times a month anyway, is that overnight, due to the fact that I sleep versus you and John don't sleep much, but I actually sleep. So I put my order in last night and I trade the euro futures too, by the way.
Okay.
105.60, and that's what I put it in last night, and I never get filled. I didn't get filled, and lo and behold, here it is, 5 o'clock in the morning. It trades up to 105.57, and
Yes.
I don't get filled, and then it drops,
Yes.
just crazy. And that was my trade. And I've noticed that I've done that quite a bit. Have you noticed that they approach those levels but don't quite get there, and so you're left kind of not in?
Yes.
I've noticed that.
Bob, I do notice that, and I saw the same thing last night. We missed it by 10 pips in the forex market itself, the cash market. The futures missed it by, I think, about $20. So it was really, really close there. Some people actually put their orders in below and got filled, but that's not what I did. I put the order exactly at the number, which was 105.60, and we didn't get there. But we still might, you see, because it broke over 120 points, and now it's come back, so it's still got a chance. So I still think that order is good, so I'm leaving it in, and that's all I can do about it. But we do miss some, Bob. There's no other way around it than just
and I
trading.
guess that's my main question is when you do miss those, and I know that happens, and it comes out, and when you look at that chart, if you look at a 15-minute chart, it looks like 1 strike, 2 strikes, and then 3 strikes would be the next run up to it here. And I'm wondering at what point do you say, wow, this is just too, it doesn't want to move lower, and so you don't enter the trade. That's what always goes through my mind, I guess.
Everyone always thinks that, because when you put a trade on, you don't know what's going to happen next. That's the main thing. But when you see something like this where you miss it by just a little bit, go out and buy yourself a little stuffed animal, preferably a cat, and you can kick that cat, that little stuffed animal when that happens, or do like I do, bang on the computer. So there's nothing you can do. You can't get them all. That's the bottom line.
Yeah, I know, but that's so frustrating. But I know that it always happens between 3 and 5 a.m. Pacific time. That's when it happens. So, it's just overnight trading. I realize that.
You got to stop sleeping, Bob. This is sleep is overrated,
Yeah, I guess so. Yeah, and there's plenty of time for sleep if you figure the whole big picture. We're going to all be sleeping.
I'm a long way from that point, Bob. I can tell you that.
Yeah. So thank you very
have a
much,
happy
and
holidays
have a great
up
weekend.
there. And I love the state of Washington. Something's happening down here. Anyway, thanks again, and a wonderful holiday to you. And thanks for calling in, Bob. We really appreciate it.
Okay, talk later, Larry. Bye.
Bet. Yeah, we can't get them all, folks. You get some, but you can't get them all. So another one that I wanted to mention to you today, I've covered the gold, I've covered the coffee, I've covered the copper, and I had one other one here that I wanted to cover, which is the crude oil. So this is an important one, folks, because this market has made a major bottom down in here. This is pretty much up to date this morning. And what I want you to keep an eye on is, notice here, this was the first 382 retracement right here. This was the second 382 retracement. This was the third one. This was the fourth one. And now we're watching for the big one. And that's right here, folks. And we almost made it this morning, but we didn't quite. So watch this, because if you get there, you're going to be making an A, B, C, D. That's at 79.40 per barrel. So watch that very, very closely. Unfortunately, with the volatility we're having right now, you've got a risk between $800 and $1,000, but this one looks interesting. Stay tuned, folks. We got the wolftrader.com coming up next. Billy Ray Valentine, Capricorn.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I believe we have the Wolf Trader himself, Shane Smolian, as our guest today. And are you there, young man?
Good afternoon. Is this Duke and Duke?
This is Duke, 100 South Broad Street, Philadelphia, Pennsylvania. You know, Shane, I have people that, honest to God, at least once a week, people send to me a little email or something, you're trying to be funny, but why don't you act your age? I am acting my age. I'm 22, for Christ's sake. Can people figure this out yet? I can't change anything after all these years. Anyway, I don't want to take any of your time away, but Duke and Duke is always have you here at TFNN. So why don't you tell us what you're looking at today, my friend?
Sure. Well, let's talk a little bit about the S&P, and then I have some notes on the Fed if people want to hear about that in terms of what's going on with the Fed on the big picture. So S&P 500. So there's been a little bit of a shift here. I came on the show last time. I talked about the fact that, I think the bear market may be over. When we had that big push down in October on the CPI report, I really felt like that was a moment where this had just come off the heels of the Bank of England coming in and rescuing the gilt operation. And I really felt like that was a significant point. We had a short position on, we covered it. So I'm no longer short. We had been short for almost since last December. It was a long time. And so we had a couple of trades that we covered. So 36.25 on that. And so really when the Fed came in and rescued this gilt operation, it really changed kind of how I looked at this, because now you can do a rate hike and quantitative easing in the same week. And so my basic feeling right now on this S&P, that's really not safe to be short. And I think we're in a phase now where you're probably going to start to see some of these white swans pop up. We've already seen a couple. We saw a 200-point up day. And then this week, the Fed made a kind of a random speech, and we got 125 points on that. So I think you're going to see more of these. I do want to speak about the election seasonals. I spoke about this before the election, but essentially once you hit September, October, it's pretty bullish all the way through the spring. I do think that there's a good chance that this will rally through into the spring, all the way up into April or May. And then we'll see what happens at that point. This is a very strong cycle. There is a runoff in Georgia, but it really doesn't affect anything in terms of the outcome of the Senate. So in essence, I think, the certainty is there. So the seasonal pattern, it rallied as we expected through the holidays. I mean, I was expecting that, and it did. It manifested. Even the last day had that big pop up in November. This is still a positive time in December. So, the holiday seasonals, the election seasonals combined with the Fed easing, I think that's going to promote a bullish scenario. When I talk about the Fed easing, I'm talking about the way that I measure it with the Fed internals and the Fed juice. I do have those back into a buy now. And also, we saw in the last minutes of the Fed meeting that they were talking about easing. So this is talking about not easing in the sense of quantitative easing, but cutting back possibly on the rate hikes. This is a chart here of the Fed internals that we track. And this is a neural network. So this is, just looking at the motions of the Fed here doesn't tell you the signal. But what I want you to pay attention to is right here on 1028. This is when the Fed internals went into this buy. This is the first time since July the 6th, 2021. So for people who listen to the show, of course, I was bearish the whole time. We were short the whole time. But things have changed now, and I'm seeing multiple changes occurring. There was many symbols that the Fed juice had been in a sell for over a year. All of a sudden, they all came back on board. So I do think there's potential here for this market to head higher. And like I said, I think there's a good chance that could extend through the spring. A lot of this is going to depend upon how much the Fed cuts back in terms of interest rate hikes, but I do think that there's the potential here for us to continue to move higher. So just to kind of put that out there, my general perspective now is definitely more bullish. And when we look at the chart here, what you can see is over here, you can see that both the Fed juice, which is red, and the Fed internals, which is purple, both of these are in a buy. And I think the path of least resistance is higher. I do have these other indicators here. We have the quad lunar cycle. This quad lunar cycle measures short-term movements in the S&P. It's been very good. It was short here across this last bump up, but it's going into a buy today. And that's heading, there's a Fed meeting coming up next week. So ultimately, guys, I just think that there's a lot of tailwind behind this market right now. And so, one of the things that we see with all of these bots that are out there, and they listen, and any headline or news headline, you get this positive feedback loop where you get like this crazy reaction. And so just a random speech the other day pushes us up 125 points. And I tell people, what do you think is going to happen when they actually change policy, when they actually start to reduce the rate of hikes or start cutting. I mean, this thing, you could see 300 or 400 points in a day or two to the upside, simply because of the environment that we live in now. So I think we're setting up now for a much, much, much more bullish situation than we had seen. And shorting the S&P, I think we had a real kind of a rare setup there, but it's really not something that is easy to do. So we really need to pick and choose, what we look at. Next week, the Fed meeting is going to be on Wednesday. That's generally I'll make this bigger so people can see this. That's generally a positive statistic for the S&P. The day after, Thursday, is negative, but I think they're going to have language in there that's going to help this market out. And so, we're in a situation now where, think about this. They've raised all the way up to almost 4% now. And so if they raise by quote unquote only 0.5, the markets will be excited and they have bullets now to pull back on this. So I just think that, like I said, we're heading into a more bullish environment. We haven't had too many of these geomagnetic storms, and we had a couple of them before that caused this market to go down, but this has been a relatively clear environment. There's nothing really happening right now on that front. I track these geomagnetic storms each day, and I give the forecast here. There's just nothing here, which means that that's a bullish path for the S&P. The S&P does not like these storms, so so far so good. We had a really good November in terms of forecasting. I think December's heading higher, and I think we're going to keep going. I just think that there's the potential here for us to keep going.
Okay, makes good sense.
I do want to talk about intraday biorhythms. This is a new feature that we have, but this is intraday model. So what I want to show people is the intraday biorhythm is a continuous. It tracks 24/7. So it's not just a cycle. It tracks during market hours. This thing tracks 24/7. And this red line is the biorhythm of the actual S&P, and then the white chart here, the white bars, is the S&P. So that was yesterday. This is how it traced out. This is how it traced out today. So what you see here is that the S&P comes up into the jobs report, spikes down, but the biorhythm was rising, right? So what the S&P does is it actually recovers, and then we came into this high here on the biorhythm. So according to the biorhythm today, this should be the high for the S&P, and it should start to have a pullback here midday. So I think this has really been a nice addition, and we're able to get like a general background in terms of what to expect in the day for the S&P. This is natural gas. Yesterday, the biorhythm was forecasting it lower. It went down. Today, natural gas, similar situation, coming down, and it just kind of has a choppy to lower as you get into the close here. And then I'll put one more in here for people who like gold miners. Gold miners, the biorhythm is showing a high right about now and is heading lower for the rest of the day. So I just thought I would kind of share this with people because I like it, because if you're dealing with a day trade time frame, it gives you a basic structure. It's not always accurate. Sometimes, like when the Fed comes out and they make that speech, it's a random speech, the market's going to go up. It doesn't matter what the cycles are. But this gives you a general background, and I really like it.
Hey, thanks a lot. We're going to be right back with Shane Smolian, wolftrader.com, for another segment. So stay with us. TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're talking with the Wolf Trader, ShaneSmolian.com. And he's got another segment coming up, but we have a question from one of our listeners, Shane, and the question is, have you dropped astrology and spending more time on biorhythms? And the second question of this is, how do you determine what the biorhythm is?
Well, that's a big question. No, I haven't dropped astrology. It's a complement to it. It's you got to think about all this stuff like a clock. So we're really, the planets are a clock. This is how the Mayans were able to calculate things more accurate than an atomic clock. So when you think about the planets in terms of just the hands of a clock moving, we're essentially just taking advantage of those periodic motions to synchronize it with the market. So that's how you would think about it. So, the biorhythms is a calculation that runs on. It's a continuous function versus just a cycle, which is dealing with market hours only. So in the sense that if a person is born, the theory behind the biorhythm is that you're at that moment you start in a certain rhythm and it follows you the rest of your life. So each of these stocks has their own rhythm. It will continuously run all the time, and it's got a lot of advantages because like when you get to these holidays and all this strange stuff, when you get market days off and market days on, regular cycles are not going to understand what's happening in the off time where the biorhythm is. So it's a continuous function.
Okay.
All right.
Good.
So. Hopefully that answers the questions.
It does.
All right. So what I want to do is talk about the modern Fed in terms of what's going on now versus the past. I did some webinars on this before, so I want to talk about the concept of the modern Fed just to give people an idea of why it's not a good idea to compare the past with the present because it's completely different. And so I'll talk real quick about inflation. People like to compare now with the 70s, and they're saying, well, I'm going to do research and figure out what happened, and it's going to be the same. You can't do that because in the 70s, we had the Fed funds rate was the primary tool of the Fed, and it was a very slow response. 2, 3, 4 months, the Fed always followed the markets. It always lagged, and we had relatively low debt levels, and we had these persistent fundamentals of inflation. Now, it's a totally different situation. The Fed has all of these different tools, the Fed funds rate, QE, the repo market, mortgage-backed securities, primary corporate credit facilities, secondary TALF, asset-backed securities, Main Street lending facility, PPP, stimulus checks, all this stuff. I know the PPP was Congress, but there's all these tools now that didn't exist in the 70s. So just like we talked about with the bots driving the markets higher every time they hear a headline, now you have the Fed that can react within hours, whereas before they had to wait 3 or 4 months. So it's totally different. and we have a high debt environment creating a deflationary backdrop. Now, inflation is fragmented now, largely because of what's going on with the way that the Fed uses these tools. Equity is primarily driven by quantitative easing. Housing has been largely driven by the purchase of these mortgage-backed securities. And then the consumer was really, they kept that inflation low because there was this firewall, which was the consumer credit rate. And so that was always higher. Even when the credit rate was near zero, the Fed funds rate was near zero, you would see these consumer credit rates at 15%. Like the spread was huge on this. And that's how they kept the consumer out of the inflation. Well, when the PPP comes in and the stimulus checks come in, now they step over that firewall and directly give people the money. And so now we have inflation there too. But I think this portion is going to come down. I think it would have come down without the Fed. So it's really a bolus, which is just a one-time push through that causes this inflation. It's not the 70s. So this is going to come down. Now equities and housing, I don't think they're going to come down. But in terms of the consumer level, I think that stuff's going to come down. So, one of the things I talk about is the fact that I call it the noble investor's credo. And the fact is that people like to pretend like the Fed is not there, or that the Fed has very little effect and the markets are so big that the Fed is really not in control. Well, maybe if you go back to the 70s or even before 2008, you could kind of argue that. But now, that's not true. And so a lot of people like to stick their head in the sand and just pretend like the Fed is not there and pretend like this isn't happening and pretend that they can just figure this out without the Fed. And they like to say that they don't make excuses and the market's always right and that history repeats. And if I study history, then somehow I can just understand what's happening now. If I go back and study the 70s and I study, 2008, I can understand. You can't understand it because these programs didn't exist before those times. So if you take that approach, you're not going to be able to understand and model how these markets work. Now, let me talk about 2008 versus now. 2008, people talking about, oh my God, this is going to be worse than 2008. And you see all these people talking shorting. And, I forgot one of these big investors that was short in the 2008, the guy that made the movie about The Big Short, he's short now. The problem is, in 2008, you had, first of all, you only had the Fed funds rate. So you're talking about these, really slow interventions. There was that day when Kramer was going crazy saying the Fed knows nothing. And then they lowered the discount window. It was like they were just really slow and then eventually they started cutting, like it was a few weeks later. But we had bad loans back then, right? And we had there was no QE. So you cannot compare what was happening in 2008 to now. Now, again, here's all the tools that the Fed has. I just talked about this. You have a very fast intervention and you have good loans. You have people that have to prove 2 years of income verification before they can get a loan. I talk to I call up real estate investors all the time and I talk to them. I say, what are you seeing on the ground? And they all tell me the same thing. It is a solid market. We're seeing a slight pullback here, but nothing major. The other thing too is mortgage-backed securities. The Fed has come in and guaranteed these loans, and that is not going to stop, guys. That's not going to stop. They're going to start it up again. Inventory problem. Now, this is multifactorial. After 2008, they stopped building, and then you got shortages. But you have these big companies now like BlackRock that came in and bought up all this real estate, and there's an inventory shortage now. So you have a permanent group of renters, a permanent class of renters now, and they're not going to give those properties up. So this is completely different. And then the last one here is so important, the powerful psychology of the intermittent reward. This is the concept of the gambler that occasionally gets the jackpot. And so when the Fed came in and not our Fed, when the Bank of England came in and they bailed out the gilt operation, they basically told the markets, hey, we're not serious about any of this tightening stuff. We're going to come in and bail you out if there's a problem. And so you have this psychology now that's been built for since 2009, and that is not going to go away. So the housing market's not taking this seriously because why? Because in the same week they raise interest rates and then they bail them out in the same week. So what I'm telling you is this is a neurological component. This is a dopamine reinforcement. And so all of these factors make this situation completely different in 2008. And this is all man-made stuff, guys. This is not, 2008, these were fundamentals building up in loans. This was all caused on purpose by the Fed. They purposely did this. And so I make this this analogy like in sports. Like the Fed has their third string players in, right? They're not even trying. So understand that if the Fed was trying right now and they had all these programs running and the markets were still going down, yeah, that's a problem. But they're not even trying. And the market essentially has bottomed now. And they have bullets left in the chamber now to start back up again.
Wow. Well, I hear the excitement in your voice. I feel the same. So let's stay tuned, pay a few bills, and we'll wind it up with Shane Smulyan, Wolf Trader. We'll be right back, boys and girls.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back, folks, speaking with Shane Smulyan, the wolftrader.com. We have a question from one of our listeners, Shane, and that is, do you feel that we're in a prolonged bull market in gold?
Oh, that's another question for another day. But what I will tell you about gold is that we're in a positive seasonal right now. So gold, see if I can find a chart for you. But the gold and Bitcoin run opposite of each other. So the gold is in a bullish trend until about, I would say, the end of January. So we're it's supposed to go up right now, like it's a seasonal peak. But longer term, I got to be more bullish on the crypto. Once we get past all this Sam Bankman, FTX stuff, I think crypto is going to make another run here. Like when we get into next year, But I think gold is it's in a seasonal pattern right now, like a up.
Oh, fair enough. Now tell the folks how they can reach you, my friend.
Absolutely. So you can reach me at wolftraderfutures.com, www.wolftraderfutures.com, and then my email is shane@wolftraderfutures.com. But what you should really do, if you're interested in the services, join us on Saturdays. So this Saturday is at 10:05 a.m. It's in the morning because my daughter has a concert in the afternoon, so I got to change the time around. But usually it's at 1, but we're doing it at 10:05. And I pick a different topic each week. So the last few weeks we've been talking about the Fed and the modern Fed. I gave you a little bit of a taste today about what we talked about. And then we talk about all different things, S&P, gold. This week's we're going to talk about self-imposed limitations on trading. So we pick a different topic each week. And so I try to show up every week and do this. And we also have a Zoom session on Sundays, and that's every week, where we talk about the polar R squared and the live trading. So if you want to check it out, it's on YouTube. The YouTube channel is Wolf Trader. It's just Wolf Trader Futures, and we'll be there at 10:05 a.m. This week it's early. It's in the morning.
Okay, that's great. Listen, thanks for joining us. We'll have you on again soon, and stay safe, my friend.
Thanks, Larry. You too. Take care, everybody.
See you all tomorrow, folks. Let's make that one.